So question 4, substantive procedures again now, but for the share incentive scheme. So we've got to do general procedures, analytical procedures, test of detail. So let me go and do those general and analytical, and then I'll go into the scenario to get the detail for my test of detail. Question 4. So I'm going to say there's no opening balance because it happened during the year. So I'm going to obtain the cash incentive scheme listing from management, and I'm going to agree balance to the general ledger trial balance and the financial statements. I'm going to cast the schedule or listing, whichever it is that I've taken. I'm going to scan for unusual items, anything that's strange, that doesn't appear that it should be there. I'm going to obtain a management representation letter for the cash incentive scheme and all relevant assertions. I'm going to consider the effectiveness of controls and the impact on substantive procedures. And now I can go and inspect the presentation and disclosure because I haven't been limited to a specific assertion like in the previous question, which was valuation. I'm doing all assertions. So I'm going to go inspect that it has been correctly presented and disclosed in the financial statements. Okay, remember guys, we are testing this as of 4 July and the payment was 30 June. So I've got to inspect that everything about this has been run its course, it's complete, and now the transactions have been recorded to show such. Then I'm going to do analytical procedures. So I'm going to say perform the following analytical procedures to test the reasonableness of. And because it wasn't something that was done in the prior year, I can't compare prior to current year, so I'm going to say compare to an industry norm or I could say compare to any previous cash incentive schemes. And the reason I'm doing this is to test whether it's reasonable or not. Okay, now I'm going to the question to find the details. So I come to the cash incentive scheme and I can see here I've got some details already next to my scenario. It's payable on 30 June 2020, so we're doing 4 July, which means it should have been paid. So we need to see that there was the provision and then the payment has actually taken place. So I want to see bank statement payment and I want to see the actual liability raised to make a payment. Okay? Before I get into the journals though, I want to see the terms and conditions. And so here's some of the terms and conditions. They have to be employed on the 1st of June and remain employed until the 30th of June. There is a salary ratio, which is personal salary divided by the total salary. The amount is going to be whatever is greater than the 1 billion times by 10% and times by the tech factor, which is clean audits and clean audits to total audits. Okay, so all of these criteria I have to test for accuracy of the terms. So I'm going to go and inspect the minutes of meetings where this scheme was decided and agree all these terms were what was recorded in those minutes. So I say inspect the minutes of meetings where the decision was passed for the cash incentive scheme and agree the following conditions were determined. And I've got to put all of the conditions I know, so that employees eligible if employed on 1 June 2019 to 30 June 2020, that it was 10% of the amount in excess of the revenue 1 billion. That is a tech compliance factor, which is clean audits to total audits. That it will be payable on 30 June, and the ratio for which person will receive is the salary to total salaries. So that's the minutes where the decision was passed. I then want to inspect those minutes to ensure it's sufficient directors voted in favor for it to be authorized. Now I've tested occurrence of the decision and I've tested the terms and conditions. Now I need to go and test what's going to be recorded in the journals. So ultimately I want to go and test the calculation. So of that calculation, I want to go and make sure that all employees that meet this criteria are included for completeness. And then I want to go and test that on the calculation that these employees are valid. They did actually meet those. So I want to do a completeness and an occurrence check of the employees that have been included in the calculation. So I'm going to say obtain a breakdown of the calculation, which includes employees that it is relevant to or applicable. And first and foremost, select a sample of employees and inspect their employment contract to ensure that they were employed on 1 June 2019, and then for the sample, inspect the 30 June 2020 payroll to ensure that they still employed. Then, that's to test that what's included is valid. I want to make sure that all employees that were employed from 1 June 2019 to 30 June 2020 are included in here. So I'm going to say, obtain a payroll report of employees employed for the period 1 June 2019 to 30 June 2020, and inspect that all of these employees are included in this breakdown. Okay, now I'm comfortable that my employees are correct. Next, I need to test the rand amount for those employees. So the rand amount for the employees is going to be the ratio of their annual salary to total salary, but that's going to be applied to the actual bonus pool. So before I test the individual amounts, I need to test the bonus pool, and once I'm comfortable with that, I can then go and test their ratios. So the bonus pool, 10% of the amount by which actual revenue exceeds the 1 billion, multiplied by the tech compliance factor. So I need to go and test revenue in the financials, make sure I get the amount, do the calc to determine what the excess is, and then apply 10% of that to that calc, and then test the tech compliance factor, clean audits to total audits. So I'm going to say, inspect the financial statements for the revenue figure to ensure that it is 1074 billion. Now I want to test the clean audit. So I'm going to go and inspect the audit reports for tech compliance and agree that there were 2 failed reports and 5 clean reports. Then I'm going to go recalculate the bonus pool, which should be the 74 million times 10% times 2/7. Now I've got the bonus pool. Now I need to go and test individual salaries. So I'm going to select a sample of employees in the schedule, and I'm going to go and inspect the employment file to agree their salary in the schedule to supporting documents. Then I need to make sure that the salary amount in the schedule is correct. So agree the salary. The total salary, hey? The payroll, or actually to the financial statements. Okay, then for my individuals that I've selected a sample for, so for my sample, recalculate the portion of the bonus pool and agree to the schedule. And I can recalculate it now because I've checked that their salary is correct. I've agreed the total salaries. I've checked the bonus, so it's just simply applying that calculation. So I've tested the ratio, I've tested the bonus pool, I've tested that calculation, tested the clean audit, so that tech compliance factor, tested the employee dates, I've tested the completeness and the occurrence. Now I need to make sure that at year end there's the liability raised and payment takes place on the 30th of June. Just want to check if there's anything else I need to test here. So on 30 June, inspect, liability is raised for the total of the schedule, and then inspect the bank statement for the total payments to employees per the schedule. Can do that because I'm testing post year end. Okay, let's quickly look at our required to see that we've addressed everything. So I've done my general, my analytical in terms of test of detail. I've tested occurrence and authorization, and then I've tested in that calculation that only employees that meet the requirements have actually been paid for occurrence. Completeness, I've tested that everyone who meets the requirements has been included in that schedule. Accuracy, I've tested the details and the calculation. Cutoff, I've checked the date of payment. And presentation and disclosure are included as one of my general procedures. So I have tested all relevant assertions. Okay, let's do question 5.